And breaking just moments ago, the Senate failing to advance a first-of-its-kind stablecoin bill that would provide a regulatory framework for those digital assets. Let's bring in Miller Value Partner CIO and Chairman Bill Miller IV. It's good to see you. Welcome back.
Great to be here. Thank you, Scott.
Let's talk about this news that broke, as I was just saying it in our intro. What's your reaction to it, which the Treasury Secretary has come out with a statement as well, really excoriating those in the Senate who voted against this?
Well, regulators have always been extremely concerned about stable coins and their place in society. I think they're afraid of losing control over the medium of exchange. But it's still very early from a regulatory perspective. So the Digital Assets Advisory Board's recommendations aren't even due for another couple months here, right? And then beyond that, we go ahead and make regulations. So it's still really early within the new administration to even be talking about, regulation, except that it's more clarity is on the way. I don't know if you saw, but a couple of days ago, the Fed just withdrew guidance that they had previously provided about requiring banks to give them notification if they want to engage in crypto custody and those sorts of activities on behalf of clients. So we're just at the early stages of this thing loosening up, but it's all very positive.
Early, but certainly an interesting stage. Just to tell folks what the Treasury Secretary said just 38 minutes ago, posted on social media following this vote, quote, "The world is watching while American lawmakers twiddle their thumbs. Senators who voted to stonewall U.S. ingenuity today face a simple choice. Either step up and lead or watch digital asset innovation move offshore." It sounds to me like you say this is just too soon to make a final judgment on where all this is going.
Yeah, that's right. No, but one of the most important things to keep in mind is if you just look at Bitcoin, it doesn't matter, right? Bitcoin doesn't care. It's back in the six figures with a lot of room to go. If you compare its primary functional use case, which is actually a check and a balance on the lack of accountability in fiat unit creation, we still have a long way to go. So gold is a 20 trillion market cap. Bitcoin is still 2 trillion despite functional superiority to gold. It's much harder to steal, much easier to store, much easier to instantly transport, and more importantly, you can actually audit it. So I don't know if you saw, but there's an estimate that said that auditing Fort Knox would take 44,000 hours and approximately 18 months to complete. I think it'd be a lot nicer for the American people if they could just go to a handful of auditable Bitcoin addresses on a blockchain explorer and see exactly where the American people's Bitcoin is.
I want to switch the topic to Google Alphabet because you made it a point to make it one of your stock picks today. Obviously, the market is reacting to this news from yesterday that was from Eddie Q of Apple, where Google search on their browser has fallen for the first time in April. Why isn't that an existential crisis now that investors should be running from rather than going towards?
I think the offset you have to consider is evaluation, Scott. So we're value investors and we look for gaps in between sort of future cash flow expectations and where things are trading. You've never been able to pay 16 times for Google, 16 times earnings, and a 5-turn discount to the market. Okay, this is a company that has 90% of search. They have 7 out of 10 smartphone operating systems in the world. They're growing their top line at twice global GDP. They're growing their cash flows at 30%, yet you can buy them at a 5-turn discount to the market. So I think all of that is true, and there are some challenges. But shame on Google if they can't figure out AI with all of this funding and all of this data that they have. So for us, it comes down to valuation. We think Google's a very attractive bargain here.
I mean, there's some who are suggesting it looks like a bargain at 16, but deserves to be now even lower because this is such a serious threat to their cash cow business.
Well, they've done a pretty good job at allocating capital in the past and crushing the market, and we don't think that that's about to change, despite the fact that the valuation says it. So I think there's a handful of ways to win here. I think if you look at the sum of the parts, the valuation's closer to 240 if it gets broken up on antitrust stuff. So I think there's a lot of ways to win here, and it's just a cheap stock.